Yeah, I mean, Apple, think about that. Apple tells us about supply chains. Apple tells us about the consumer. Apple tells us about technology and what's happening. So when you look at Apple, it just tells you so much about what's happening in not only in the U.S., but the global economy. And, you know, Tim Cook just continues to execute with their team. And so I would be surprised if Apple didn't continue to execute, right? So that's where it's done really well. It's held up much better than the vast majority of tech stocks. And so I think it will continue to do that and gives that ballast and that comfort level that, you know, the stocks in the NASDAQ today are not the same stocks that were in the NASDAQ in the 2000s. These are juggernauts, high cash flow, starting to pay dividends, you know, just like wonderful bellwether companies that really all of us own because they're in Apple's in every single index, value, growth, momentum, you know, the S&P. So, yeah, I think it's a big proxy for a lot of different things that we can all look at.
Which is why one Jim says to another Jim, don't trade Apple, Farmer Jim. Why are you trying to do that? Right? Jim Cramer says you own it, you don't trade it. You had sold a little bit, right? You cut your position a little bit, and now it's gotten away from you again.
Scott, I'm not sure I can do this fight because it's not a hill that I want to die on.
It's not a fight. It's not a fight. It's just a lesson. There's no fight. This is teaching, my man. This is don't trade. Don't try and trade in and out of Apple. You got burned again.
See, I'm so tempted to just roll over and show my belly and say, sure, you're right, Scott. But the answer is, I traded it well.
Please.
I traded it well.
I beg you, our viewers are screaming, don't do that.
Don't worry, I won't. But no, look, I traded it well. You can trade this stock. You know what? I need to have a drink with Jimmy, and we need to talk about that one-on-one.
I think this is proof in the pudding that you can't. Isn't this proof? Proof's in the pudding that you can't trade this thing.
All right. You know what this is? You know what this is proof in the.
Right, on the 14th of March, when it was down at 150, I didn't hear everybody pounding the table. I got to buy it, and now here we are, $10.
That's because I did that. I did that last year. I did that last year, Scott. It worked out great. What this is proof of is that in this business, you're only as good as your last trade.
What have you done
I will
for
accept
me lately,
that.
baby? That's what matters.
I've done Cleveland Cliffs for you. I've done Paramount. I've done CVS. But it's all good. It's all good. You can be right on this one.
No, but my point, Surratt, really is, and others are clearly making it, it's not rocket science and no genius for saying it. You know, Tom Lee cites the other day on Overtime with me. It's kind of hard to get negative on the overall market as long as Apple continues to go up. I mean, it's just a fact in the math.
It really is. And if you look at them, and Bryn was right on that, it's a bellwether. They have, you know, global demand, global supply chain, and they know what the consumer is doing. I mean, they have the pulse of the consumer. So as long as we see good things coming out of Apple, I think you can have the knockoff effects on a lot of other industries and companies, so we get some indication as to what earnings season is going to look like.
Now, I don't want to get like crazy ahead of ourselves or anything like that. And look, Jim, we've given Jim a lot of grief. We've given him grief on Apple. We did it again today. We've given him grief over the years on Intel, which he's no longer in, so he doesn't even feel the grief anymore. And we certainly gave him a lot of grief on his big call to get back all in the market, though yesterday he said he wants to lose that moniker, which I don't think I'm going to let him do. But maybe Jim's right. Maybe the story is more positive than investors want to realize. Maybe we're not going to have a recession. Fed's going to be aggressive. We kind of know that. There's going to be a little bit of a slowdown in the economy from the very strong levels that we are today. We know that, too. Don't we, Jim? Isn't that priced in the market?
Well, I think there are negatives and positives priced in the market. Scott, you and I had a great conversation yesterday in which you said you thought I was being dismissive of the negatives. The negatives are real, okay? And Josh actually did a great job the last 2 days of pointing them out. Whether it's an aggressive Fed or the potential that something bad goes on with Ukraine, something worse than what's already gone on. The point I've been making is that the economy does appear strong, whether it was yesterday's jobless claims, whether it is the factories that are being built out. Now, I know you're going to say, because you've said this to me so many times, you're telling me where the puck is, Jimmy. Where is the puck going? And I'm going to put to you that there are positive scenarios that can come out of the immediate future. inflation was showing signs of rolling over prior to Russia-Ukraine. So West Texas Intermediate at 114, which, by the way, didn't stop the economic expansion a decade ago, might be overcome by supply chain bottlenecks that have been starting to ease at the ports and in the freight indices. So it's not that I'm just seeing sunshine in the clouds. No. I understand the clouds are there, but I think there's a balance to be struck. The market has struck it and is now focused on the positive.